All right, traders, what is up, everybody? I'm gonna quickly go over this week's analysis for the following week. We plan our trades and then we trade our plan. And considering that this is the first time I'm actually, publishing my, I guess the way that I look at the markets, I'll give you guys a quick introduction as to the method that I use. Very quick, simple, easy, and then we're going to dive into some of the currency pairs that I'm going to be looking at for the week ahead, and you guys can also kind of look at my perspective and I guess do your own analysis, do your own due diligence. Don't take this as any type of financial advice whatsoever. If you're completely brand new and you have no idea, then please don't go out and take any trades based on the information that I'm going to be sharing with you. And then again, if you are completely brand new, be sure to stick around, because I'll be kind of release some of these slides. You can see I've got around about 80 odd slides here, and I think I might add some more to it. There's some things that I want to kind of include in there, but really at the heart of it, the most important thing amongst all these 80 slides here is this one slide that you're looking at right now. So we're gonna quickly go through the introduction, quick disclaimer, and we'll dive straight into week 45's analysis. Alright, so as mentioned, I am going to give you a quick introduction, and so that you can really see how it is that I'm observing the charts and marking out levels, and ultimately looking for trades to be taking throughout the following week. So it really all boils down to these three core components. Okay, the TLC method essentially it stands for trends, levels, and candlestick patterns. Okay, and no matter what type of technical analysis you are, whether you're using stochastics, RSIs, and moving averages, and I mean I'm a naked trader, so I just trade pure price action, which I strongly believe is all that you really need. There's no need to overcomplicate it. There's no need to confuse yourself with messy charts and overwhelm yourself with so many different variables. Keep it very simple is really is the heart of like, you have to keep it super stupid simple, right? You overcomplicate it, you confuse yourself, and you make impulsive decisions, which is a no. Okay, you don't want to be making impulsive decisions. All right, remember this. All right, time is your friend and impulse is your enemy. All right, so be patient and wait for these trades to unfold right before your eyes. Okay, all right, so right off the bat, there's no chronological order here. We just need to identify these three things as we're looking at the charts, and right off the bat, one of the first things that I do is I look to establish trends. Okay, so here we're looking at euro dollar. What do I see right off the bat? Well, I clearly see a downtrend. Okay, we're in a downtrending market, and markets don't move in straight impulsive moves. Okay, even though it may be apparent that it's an impulsive move, i.e. right here. Okay, that looks like just a straight down tank, and yes, the market kind of did tank here. However, even though it looks like an impulsive move to the downside, it moved in a fashion that's in a fashion where it zigzags it on its way down. Okay, it creates these peaks and valleys. So although it's not apparent right here right now, we're on the daily time frame. In fact, if I quickly do this and just highlight this entire section, this is the daily time frame. Each candle represents one day. Now if we drop down, I don't know, into the 4 hourly, okay, and we look at that highlighted zone, you can see it's expanded, and there's now even more candles. Okay, because one 4 hourly candle, one daily candle, if you break that one daily candle and you look at it from a 4 hourly perspective, it's made up of 8 different 4 hourly candles. So 8 4 hourly candles will make up an entire day, right? And so that's why it's expanded. If I just hop back onto the daily, you can see it's it's not so many candles, but we want to zoom into that and see how it dropped down. Okay, how did it make its way down? And if we look at it, okay, again on the higher time frame, on the daily time frame, although it looked like it just dropped straight down, in actuality what actually happened is it zigzagged on its way down. Okay, it's created lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Again, it's zigzagged its way down. All right, this is known as a downtrend, and this is what happens in the market over and over again. Okay, there's only three ways that the markets will ever move, and it's either in an uptrend, where it's creating higher highs, high lows, high highs, high lows, high highs, high lows, high highs, high lows, right? Or we're in a downtrend where we're creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. I mean, kind of play along with me here. What would you expect next? A lower high, right? What would you expect next? Lower low, right? So the market moves in this I mean, predictable fashion. Okay, and the third way the market's moving is sideways, where it's just moving in between two price points, and it's just moving in a sideways fashion. Now obviously the market's not going to move as perfect as this, okay, although sometimes it does. You know, the overall picture, when you just kind of take a step back and look at the charts, you will be able to identify these obvious patterns. And if we go back onto euro dollar, and remember we're looking at what we want to be doing for the coming week ahead, and we go back into the daily time frame and we look overall, what have we been doing? We've been dropping down. We've created these lower lows, lower highs. We moved sideways for a while, okay, until we broke this support level, snatched straight back up into this range, okay, still holding within that range, and up until recently we've came back down towards this low, this support level right here, and we actually broke and continued on that same pattern, okay, where we created a low, lower high, lower low, straight down into a support level, okay. And this is where we use support and resistance, okay. Our next thing is to identify these levels, so we can clearly see we're in a downtrend, okay. We've got lower lows, lower highs, lower lows. What would you expect next? A lower high, okay. Now again, because we're in this downtrend, because we're moving downwards, my main bias would be to sell on any strength. So as price comes up to these levels, I then want to look for opportunities and drop down in the lower time frame, and right as we come up to these price levels, 1.1500, which is a round number, and again on my slides here real quick, we can see that round numbers are something that we look out for, and trend lines and other added confluences when we're looking at the charts. And right here we can see that price is not quite up into this level, but that's pretty much what we're going to be looking out for the following week, is for price to come up to 1.1500s, and the simple reason is because we're in a downtrend, we're creating lower lows, lower highs, and price likes to navigate back up towards its previous resistance, okay. And then finally, once price is here, we're then going to look for entry reasons. We're going to find reasons as to why we should take a trade short, okay. Because here's the thing, okay, real quick, when price in a downwards movement, when price comes down and it stalls and it reverses, it leaves a valley, okay. This is known as a support level, right? Just as we have here, price came down and it reversed, it's now given us a support level, okay. Now what happens is when price comes back down to support, we want to look for buying opportunities. We want to look for opportunities to go long, okay, just as we've done here, okay. As we came back down to the support level, we had buying opportunities. The candlestick patterns tell us that there's pressure, buying pressure coming in, and we can now look for opportunities to actually buy this and you know, obviously make money, right? And so now what happens when we don't hold this support and we don't get any price action? Well, we're not gonna take the trade because it wasn't part of our plan. Our plan is when price comes here, we want to see candlestick patterns and we want to then take the opportunity to go long, right? So now if it breaks, okay, let's clean the chart up again here. We've had price come down, it's moved away, reversed, and we've now found a support level, and we're either waiting for price to come down, give us a buying opportunity, or we're expecting it to break, okay. Now when it breaks, you don't want to be entering into an accelerating market. It's gone, we have to wait, right? So what we're then doing is we've created a lower low, and then what's likely to occur next? The lower high, right? Back up to this resistance level. We're expecting it. We know this is the way that the market moves. It's something that happens over and over again. And right back up to this resistance level again, we want to look for candles at this level, at this previous support that's now resistance. We want to look for candles to candlestick patterns telling us that, hey, there's selling pressure coming into the market, and here's an opportunity to go short, and we want to take that opportunity and go short in anticipation for a continuation. Okay, so a break of support, a reversal back up to that previous support to use it as resistance, and then a continuation. Okay, it's called BRC. All right, I'm not going to get into it too much, but it's a break, reversal, and then continuation. Okay, and so now right here we have support. We're in a sideways moving market. Support. Okay, price goes up, and then what happens? Price breaks. Okay, just as it did here. Okay, where we broke the support level right here. Okay, we broke the support level, and so then what do we expect next? Based on what I've just explained here, what do we expect next? A break, B, and then a reversal into a resistance. Okay, so BR, and then a continuation to the downside. So we had the break, we've got the reversal back into a level, okay, where we're expecting candlestick patterns to tell us to go short for a continuation, right? Because we've got the lower low, lower high, lower low, lower high for a lower low. Okay, but what happened here? We didn't get no candlestick patterns, no selling pressure telling us to go short. Make sense? So based on this entire example here, okay, I can use the same example here as well. Okay, so we've got lower low, lower high, lower low, and now we have a resistance area, previous support, resistance. Now what we want is we want price to go back up, and we already see selling pressure. This is a candlestick pattern that indicates a lot of selling pressure. So the coming week ahead, what I'm expecting is for price to come up to this level and present us with an opportunity, a candlestick pattern to go short, okay, to sell, and obviously to make money, right? And so it's a nice level. We have support, okay, really nice level. We're in a downtrend, okay, and we want price to come back up to this level so that we can go and sell this market, looking for an opportunity to bank. Okay, and now you have to be aware of confirmational bias. Okay, just because we're calling it short, we're seeing short, and we don't want to be fixated on the idea that all it's going to do is just drop. No, we want to look at an alternative possible outcome, which is that it may continue going even higher because we are at a support level. What did I mention earlier? Okay, when price comes down, stalls, reverses, we find support, okay, and we are expecting naturally for price to come down and use that support, okay, again, and hold, giving us opportunities to go long, candlestick patterns to tell us there's buying pressure, we want to go long. So right now we have a support right here, okay, it's 1.13 1320, okay, 1320, it's a 20 level, it's a round number, and you can see, look at the price. When price came here previously, it moved straight up. Price came here again, look at this candle, okay, we went straight up. However, we didn't go, it wasn't a very strong close, we couldn't break above, back up into this range, okay. In fact, we rejected it, okay, which is telling me, look, it's a lot more higher probability for me to look for selling opportunities than it is to look for buying opportunities. However, if we do retrace back down, okay, and then we get any price action opportunity signal, something similar to what happened here, for us to go long, then I'll happily take it. However, I'm aware that it's against the trend. I'm aware that I'll be taking a counter trend trade, okay, and I'll take that into consideration, which means managing it effectively, shorter profit targets. I want to be in, I want to be out, I want to make sure that I'm not holding on to it for too long, because ultimately my main bias would be to look for selling opportunities. And as long as we remain below this level and there's heavy rejection, candlestick rejection, candles rejecting that level, i.e. similar candles to something like this, it's a pin bar, okay, something like this, right? Because notice, right after these types of candles, long tail bars, pin bar candles, what did we have? We had a continuation to the downside, okay, similar to candles like this. These are types of candles we want to see right up into this level, okay. Those are the kind of things that we want to see. If we don't see them, we don't take them. There's no need for us to make impulsive decisions, and we want to always be operate from a place of neutrality, okay. We don't want to be involved in the oscillations in the market. We don't want to, because there's two main emotions, all right, and that's fear and greed, and we don't want to experience any of those two extremes. We want to look at the market from a neutral standpoint, an objective standpoint. We're not just saying short, short, short. We're saying if the market comes here, we're looking for XYZ. If the market comes here, we're looking for XYZ, right? So that's what I'm looking at euro dollar. I'm looking for some strength up towards the 1.1500 levels, where I'm then going to be looking for price action opportunities to go short, and that's what I'm looking at euro dollar. Very, very clear, very straight, very simple. So just to quickly draw it out, some price action opportunities along here to go short. If not, and we continue coming down, then I'll definitely want to be looking for price action opportunities to go long here. And if neither of those outcomes occur, then I'll observe, I'll wait, I'll be patient until we get the opportunity telling us to do otherwise, okay? Because we might even have price breakdown below, and then if we close very weak like we did here below a support line, okay, then we are expecting price to go back up and then reject it, okay? Go up and then reject it. All right, that's what we'll be looking for. So it can do whatever it wants to do. We have no control over what the market's doing. So price action is actually a form of interpreting price information. As price is moving over time, it's leaving information within the price, and the best way to read this type of information is through understanding candlesticks, okay, which is, remember, part of the TLC, right? Trend, levels, and candlesticks. Okay, I haven't really discussed anything else other than that. All right, market structure leaves clues, and it's these structure levels that we're always going to be keeping an eye on. And so that's euro dollar. How long are we into this? All right, 14 minutes. Okay, so moving on to the next pair, looking at gold. All right, now gold has been super fun over the past couple of weeks, and we've been trending lower from this point onwards, and we had a support right here, we had a break of support right here, okay? When support broke, okay, when support breaks, look at this, okay, we've got a sideways moving market. All right, we had a sideways moving market, we had nice support along here, and support broke, okay? And what happens when a support level breaks? Okay, we expect that support level to be used as resistance, okay? We expect it to be used as resistance, similar to what we just discussed on euro dollar. An example was that we expect it to use previous support as resistance, but what happened on euro dollar is it went straight back up, didn't it, right? And in this case, it pretty much did what I anticipated, which it was to for price to come and break this support, which it did, okay, and then reuse that previous support as resistance, and then give us some price action signals, okay, to tell us that we can get into the market. And what do we have right here? Look at that candle, okay, nice long tailed candle bar. It is a very bullish one, however it's significantly weak compared to these other surrounding candles. And we can get into the psychology of this. People are buying, actually most people buy too high and most people sell too low. That's just the way human nature is, okay? Most people are always against the trend, okay? And you have, this is why you have to operate from a neutral standpoint. Anyways, so this is an example of what happened, right? And on the flip side, okay, we have here where price ranged for a while, okay? We just moved in this sideways fashion. We had resistance, okay, and then what happened? When resistance breaks, we expect that to be used as support, and that's exactly what happened, okay? Price went shot straight back up. There was no opportunity, there was no candlestick patterns here for me to go long, which is why I'm not in it, and nor will I be buying here. I'm not going to be buying here. I won't be buying into an accelerating market unless I see something obvious, especially considering that we have this candle right here. Definitely wouldn't. Nor do I actually want to sell it, even though there's an opportunity here to sell it. I really don't want to sell it, considering it's gold, and this gold has its own I don't know, personality, if you will, okay? Because when we're looking at the charts, we're looking at the way the market's thinking and feeling, right? So it does have its own personality type, if you will, right? Gold likes to make a lot of false breakouts to the highs or the lows. So in this scenario, what am I looking at for gold? So what do we see? Okay, we have a higher high, higher low, higher high. Okay, what do we expect next? A higher low, which also aligns with previous resistance. Okay, so I want any weakness in gold, okay, I want to be buying. And even if it comes tumbling down here, we're still above previous higher low. As long as we're above the previous high low, I want to be looking at price action at 1212, and I also want to be looking at price action at 1200 round number as well, because it's a nice psychological level. Okay, 1200. Okay, and that's where I want to be looking for opportunities to also go long. All right, again, following the TLC method, we can see what the type of market that we're in. We've just created a higher high. Okay, it's indicating that price is likely to start trending in an upwards direction. We've got the higher high, we have a higher low, and we are still within a higher low territory. It could do this for a while, maybe a little false break to the downside, and then move up. Okay, or it just might start shooting straight up, and then if it does in that case, then we will still be looking for higher lows to get in on this trending market. Okay, so 1212 and 1200 are levels that I'm going to be keeping an eye on. I'm not going to be looking to short this, even though we are at a significant level. We can see we have resistance right here, support right here. Okay, support right here, support along here, resistance along here, right there, and then again resistance followed by a nice pin bar. So we actually might go something like this, okay, which would be perfect, because I definitely want to be going long on this. And again, me looking for selling opportunities will basically mean that I'm going against the trend. And if you're new, you shouldn't really be counter trend trading. And even myself, like ideally, preferably, I wouldn't like to go against the trend. Okay, so that's gold. These are the levels that I'm looking at on gold. Super exciting, looks really nice actually. So now moving on to Dow Jones. As you can see, I have my levels marked out. So now on Dow Jones, look, all right, significant sell-off, retracement. Okay, retrace back up, continuation back down. All right, significant sell-off, retracement, and then boom. All right, continuation to the downside. As simple as that. All right, now we already have a price action candle right here. However, I would have liked this to be up here somewhere, because it's still within, because we can look at this and say lower low, lower high, lower low, and lower high. As long as we remain below, okay, the 25,800 area, I'm short. I'm definitely short. And even up here where we have, remember, previous support, can you see this right here? Price came down, rejected it, came down, rejected it, and then broke. Okay, so we broke it, and we are likely to even come up to the 26,000 level. And if we do, then, you know, again, I will be looking for selling opportunities right here. Even at 26,800, look for selling opportunities there, because previous nice resistance along here. My main bias on this is short, and if we do get price action down at this level, because we have resistance along here, support, okay, it's a little bit choppy here. We've got resistance along here, okay, a little bit choppy through here, but it's still a nice level, 24,000, 25,000 round number, a nice significant psychological level. We can look for opportunities to potentially go long. So again, we're in the middle of where it is that we on either direction, it can go up and we'll be looking for selling opportunities, it can go down and we can be looking for buying opportunities. However, it's a lot more higher probability for us to be looking for selling opportunities, and so that's what I'm looking at on Dow Jones. All right, okay, so we've got dollar yen. All right, so we are actually coming up to a very significant level. If we zoom out here on the weekly, we can see we have you know, we have resistance right here, resistance right here, okay, resistance right here, resistance right here. We got some resistance along here, okay, and support is quite up here. You know, this is a much more significant support level. Now look, we can reject that level and come down, okay, or we can break out to that level, and then we'll be looking at our next level of interest, which would be either one of these two levels, just looking at it with naked eye. And so now dropping down into the lower time frame, we can see, okay, important level, significant level, and we came back up to that level, and what happened, we dropped away right away from that level. Okay, but we want to look at also how we made our way up to that level. Okay, we had higher high, higher low, higher high, higher low, higher high, higher low. Can we get a higher high? Can we break this high right here? Can we expect a breakout? Okay, yes, potentially. Okay, and if we do break out, it basically means gold is going to go down, which is even better, because I want it to come down even more, because I know there's an immense a really good risk to reward on gold. The more it comes down, the better it is for us, really. Okay. And so, look, following the trend, okay, even though we can see this apparent trend, okay, within each leg move up, okay, we can even see, if I kind of grab a different pen here, maybe what color is a good color? Green. Okay, we can even see, even though it's an impulsive move, remember, within a trend there's even more trends, and we can see one right here. Look, we've got higher high, higher low, higher high, higher low, higher high, higher low, higher highs, higher lows, higher highs, higher lows. You see that? Okay, even here, okay, higher highs, higher lows, higher highs, higher lows, higher highs. You see that? Okay, and then even right here, higher highs, higher lows, higher highs, and this is, you know, really low time frame stuff. Higher lows, higher highs, higher lows. You see that? Okay, and so we've come down, and then we have it again, higher highs, not quite higher low, but you know, we've got nice strong rejection, higher highs, higher lows. Okay, so yes, I want to be selling the dollar. Really, that's my main long-term bias, is sell the dollar. I mean, the dollar's, it's lost nearly its entire value, and it's really hanging on to the edge of the cliff, really. So it's just a matter of time till something significant happens. It really is. It really is. I mean, all you have to do is do a little bit of research and a little bit of due diligence, and you'll see that history kind of repeats itself. And if it's not repeating itself, it definitely rhymes. And we're experiencing something similar to what's happened previously in the past, even in the Roman Empire. There's a great series on this stuff, and you should highly recommend that you watch it. His name is Mike Maloney. He's the founder of goldandsilver.com, I believe. Anyways, Mike Maloney, type it in and watch his entire series on the history of money. Okay, it'll make sense. It'll make sense. Okay, and I don't want to get too deep into that stuff right now. And anyway, so within, you know, the red line is the higher time frame, I guess, and the green line is the lower time frame. All right, and so even though we've already created a higher low, okay, you might think, oh well, we missed our opportunity. We've got the higher high, higher low, we've missed our opportunity to go long. It's already up here now. Okay, but remember, even within this anticipated leg, what we're expecting, higher high, higher low, higher high. Okay, even though price is here right now, we're expecting it to come up and break this high, right? Even though we're expecting to break its high, and it looks like it would like to break its high, remember, it's not going to just shoot up like that. It's going to trend upwards, as it's doing already. Okay, so, and we might even make a deeper one here before we go up. So we definitely want to be keeping an eye on anywhere closer to the 1200. I mean, you know, I guess something like that right there. Okay, because look at this, we've got nice support along here, really nice support. Look how price, every time it's touched the 112 level, it shot straight back up, shot straight back up, shot straight up. Okay, it's a nice clean level. All right, last time it came and it broke that level and it went back up. Look at it, look at how it moved away from it. Okay, and look at how we've, you know, we're moving away from this level. It's a really nice level. This, when you just have to simply look to the left, all right, and you know, kind of evaluate how important, how significant is this level. I mean, if I was to take this line and drop it somewhere, you know, randomly like here, it's not a really clean level, not as clean as it is if we was to drop it down here. Okay, at, where are we, 1200? There we go, right there. Okay, look how clean this level is. Okay, so any weakness and we get price action, we're looking to sell. Okay, now look, just because it's in an uptrend doesn't mean that this has to break, and it doesn't mean it will, you know, just doesn't mean it has to break, and it's a resistance level. It's likely to even hold. So on the flip side, the other potential outcome, alternative, is we want to see any price action at this level. Okay, if we're not in on this, or you know, we've missed an opportunity and we shoot straight up and we get any price action at, you know, 113 800, 114 200, we get any price action, we definitely want to look for shorting opportunities. It covers a lot more risk to reward. Okay, so I'm short on the dollar, but however, following the trend, you know, and considering how important this level is, how strong this level is, okay, you know, I want to be also observant and kind of pay attention to potential short opportunities as well. Okay, I do also look at market sentiment. Again, that's something else for another video, another day. But market sentiment really does help with being able to be on the right side of the market, if you will. Okay, how long have we been doing this? Okay, 28 minutes. All right, euro pound. Oh man, euro pound. Very straightforward, guys. Okay, look at this: lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Is this a lower low? This is not a lower low. It hasn't broke this previous lower low, right? Which means we're still within previous lower high and previous lower low. Okay, which means it can continue coming down. If that's the case, we don't want to be getting into a runaway market. Also considering the fact that we have a nice support level right along here. So if price does come here and we get some price action to go long, we can go long. However, you know, we're in the downtrend. We've rejected these highs pretty significantly. I do want to wait for any strength. Okay, any strength, I want to be selling it, considering the fact that we are in this downtrend. Okay, so any strength up towards the 0.8850, 8880, okay, anywhere in this zone. Why? Is because if we just look to the immediate left, we can see nice level here. Okay, if I just grab my pen, look, support along here, resistance along here. Okay, we have resistance along here. It's a bit choppy, but even here we can see some resistance, some support. Okay, and then we have also these levels which we've already pretty much rejected. Okay, we actually rejected that very heavily. That's a big drop. Okay, over the past 2 days, big drop. So any retracement, we definitely want to be looking for potential shorting opportunities. You know, my bias on this is that it might even just tank. But you know, we don't make those kind of decisions. We don't trade. We trade what we see, not what we think. Okay, we can think and feel all we want, but you know, ultimately the best advantage that we have when it comes to trading the financial markets is to trade what we see. What is price telling us? You know, what is mass psychology saying? You know, what is and in terms of fundamentals, I mean, I just look at a much more bigger picture. I keep an eye on interest rates and employments and stuff, and other than that, I don't really dive too deep into all the lower time frames and you know, less impact news data. Technicals work perfectly fine, and I believe that's really as much all you really need to really be able to take advantage of being able to profit from the financial markets. Okay, so that's euro pound. These are the levels that I'm looking at down here at support. Again, if we get some price action here, we definitely want to be looking for opportunities to go long, but again, that will be going against the trend, so we want to make sure we get in somehow on any strength on euro pound for potential shorting opportunities. Okay, all right, so that's pretty much it. You know, I do look at other pairs occasionally, especially when I have other students kind of shouting out what it is that they're looking at, and maybe there's other opportunities elsewhere. I mean, there's so many to choose from, so many different currency pairs, so many different commodities, and so much to choose from. You don't really need all these different pairs. I mean, I actually kind of stick with 5 or 6 pairs, and out of 5 or 6 pairs, even if 2 or 3 give me really good opportunities, I'll take them. All right. And obviously there's other things that if you're new, then there's other things that you really want to take into consideration further down the line as you're learning and as you're kind of acquiring trading knowledge and skills. Is you will find that risk management is something that's super important. And you know, you always want to manage risk, especially if you're new. You want to kind of create that habit and of constantly managing risk, and you want to preserve capital. Capital preservation is so important in this field of work, if you will. Risk management is super important. You always have to manage risk. All right, it's all about and just like with anything in life, man, you have to manage risk. Okay, you have to protect yourself from anything that is likely to occur and happen. And every single trade that I take, it's not, yes, I'm in this trade and now it has to win. It's a long-term thing. Okay, out of 10 trades, even if I lose 7 trades in a row, I know that I'll still be profitable, simply because of risk to reward factor. Okay, which again is something else that would, you know, it really requires a different video and whatnot. But that's pretty much it. I just wanted to go over this week's pairs that I'm looking at. If you have any questions, any queries, or maybe you have some questions about the way that I'm looking at the markets, and by all means, please do shoot me a message. Let me know. If you have any questions, I'll be more than happy to answer your questions. And if you are brand new and you need help, reach out. I'll be again more than happy to kind of go over things with you. And with that being said, make sure you like, subscribe, and comment, and like this stuff and share it, because it'll tell me that it's worth my time doing this, because people are benefiting from it. And that's pretty much it. All right, okay, so look guys, plan your trades and trade your plan, manage risk, and happy trading guys. All right, that's it from me, Mamoon Ahmed. I'm out. Bye for now.